Tax advisory firms versus accounting software. Which one is better for optimizing business taxes? Most business owners get this wrong by assuming that accounting software alone is enough to minimize tax liability. The surprising truth is that tax advisory firms and accounting software serve very different roles, and choosing the right combination can save your business thousands. Accounting software is excellent for tracking income, expenses, and generating reports. Programs like QuickBooks or Xero automate bookkeeping, calculate basic tax obligations, and help you stay organized. They are ideal for standard compliance and routine filing. For instance, a small business can use accounting software to manage invoices, payroll, and VAT returns efficiently without hiring extra staff. Tax advisory firms, however, provide expert guidance on strategic tax planning, deductions, and compliance with complex regulations. Experienced tax advisors can identify opportunities for savings that software might miss, such as optimizing depreciation schedules, leveraging tax credits, restructuring investments to reduce taxable income. They also represent your business in audits or disputes with tax authorities, which software simply cannot do. So, which is better? Accounting software is perfect for day-to-day bookkeeping, expense tracking, and generating reports. Tax advisory firms are essential when your business faces complex tax scenarios, plans significant investments, or wants to proactively reduce tax liability. Many successful companies combine both software for efficiency and advisors for strategy. The key takeaway is that relying solely on software may leave savings on the table, while using only a tax advisor without proper bookkeeping can create errors and delays. By blending technology with expert guidance, businesses can streamline operations, maintain compliance, and optimize taxes effectively. The surprising truth is that the smartest businesses don't choose one over the other, they use both to stay organized and strategically ahead.